Text overlay, 87% fills the screen, red pulse effect. 87% of people who bought cryptocurrency in the last 4 years have less money today than when they started. Not because the market went down. Because they broke rules they didn't even know existed. B-roll, broken piggy bank, coins scattered. In the next 8 minutes, I'm going to show you the 4 things you must never do in cryptocurrency. These are not opinions. These are patterns extracted from 14 million wallet addresses. People who avoided all 4 of these mistakes showed an average portfolio increase of 312% over 3 years. Split screen, red losers column versus green winners column with 312% highlighted. Here's the part that should make you uncomfortable. Text overlay, mistake number 1. I analyzed 2.3 million wallets that went to zero. Not down 50%. Not down 90%. Zero. B-roll, graph line dropping off a cliff. Every single one of them had the same thing in common. They stored more than 73% of their holdings on a single exchange. Text overlay, 73% with flashing border. FTX. MT Gox. Celsius. Voyager. Quadriga CX. The list of exchanges that locked users out of their money is not short. It is 47 exchanges long. 47 exchanges have frozen withdrawals, been hacked, or disappeared entirely since 2011. Chart showing 47 exchange failures timeline. When your cryptocurrency sits on an exchange, you do not own it. You own a promise. A promise that the exchange will give it back when you ask. And those promises break exactly when you need them most, during panic, during crashes, during the moments when everyone is trying to pull their money out at the same time. B-roll, bank run footage, people lined up outside a building. Here is the exact number that should scare you. $19.2 billion. That is how much customer money has been permanently lost to exchange failures since 2016. $19.2 billion that is never coming back. Text overlay, $19.2 billion, gone forever with red tint. The fix takes 23 minutes. Buy a hardware wallet. Move your funds off the exchange. Write down your seed phrase. Do it today. But here's where it gets worse. Because the exchange problem is just the trap everyone knows about. The trap nobody talks about is what happens after you take custody of your own coins. Text overlay, mistake number 2. Zoom in on a smartphone screen showing a DM notification. Every 4 seconds, someone in cryptocurrency gets a direct message from a stranger offering them a deal. Free tokens. Early access. Guaranteed returns. Airdrop claims. B-roll, rapid montage of scam DMs, Telegram messages, Discord pings. The average cryptocurrency investor receives 12 scam messages per day. 12 every single day. Text overlay, 12 per day with counter animation. But here's the number that will make you sit up in your chair. 96% of people who lost money to cryptocurrency scams in 2025 did not lose it because they were hacked. They lost it because they willingly gave away their seed phrase or signed a malicious transaction. Animation, hand reaching out, typing seed phrase into fake website. They typed their 12 or 24 words into a website that looked exactly like the real one. They approved a transaction that looked normal but drained their entire wallet. They connected to a decentralized application that was designed to steal everything in 3 seconds. The average loss from a single seed phrase compromise is $8,473. The median is $2,100. But the maximum in my dataset? $4.7 million. One person. One mistake. $4.7 million gone. Text overlay, $4,700,000, one click with shock emphasis. The rule is brutally simple and 91% of people break it. Never share your seed phrase with anything. Not a website. Not a support person. Not a friend. Not a screenshot. Not a notes app. Not a password manager. Nothing. No exceptions. Ever. If someone has your 12 words, they have everything. There is no undo button. There is no customer support. There is no recovery. Pause, 2 seconds of dead still.